Good morning, traders. It's Friday, February the 21st. Taking a look at the charts, it's going to be a pretty significant week for precious metals. We talked about this starting out on Monday, how really the close on Friday, we'll see if the precious metals can hold up above some of these resistance levels. We'll cover precious metals in just a minute, but let's take a look back at the equities markets. SP 500 had a little pullback yesterday, continuing to pull back a little bit more, down 0.4% this morning. It has had a nice run. It's taking a little bit of a breather. It still has room to the 20-day moving average. Now, we did get in and play this move to the upside. We locked in a little bit of money a few sessions ago on our SSO play. We have the rest with of our position with a stop at break even. So if this does start to sell off today, then we will get out the balance at break even with a small profit on our first half, and we'll reanalyze things for a new potential entry point or to put that capital to work somewhere else, wherever the next entry point happens in the market, whichever asset class. Now, if we take a look over at bonds, bonds are having a nice day. Money's coming out of stocks. Bonds posted a very nice day yesterday, trading right up to this previous high. Today they're pushing higher, and now they are testing this more significant previous high. Let's just zoom out on the chart, take a look at this pattern here. You can see this move, and if this pattern holds true, we've got potential for some pretty big upside moves. Depending where we want to look at it, we could go from these double bottom here up to these closing bars and go back down to these double bottoms down here. If we were to squish the chart, we could see where bonds could potentially run to. You can see here we've got the bull flag, or the flagpole, the bull flag, and then it's starting to come up and test these highs here and this high. If it starts to break out, then we're going up here to the 174, potentially all the way up to the 185. I don't know if it'll quite make it that high. I think it could take a while to get up there, just like over here where it rallied up, consolidated for several months, pushed a bit higher, consolidated for a month, pushed higher. I don't think it's going to be something that goes parabolic. You never know, but overall, that's where the money is running to, is the safe haven plays, bonds and metals, and the U.S. dollar. So we're seeing a nice pop here in the bonds today, which we are long bonds as well. Let's take a look over at gold. Gold's posting some pretty significant gains this morning, up 1.66%, really starting to kind of pop and take off. And usually when you start to see price go parabolic straight up, it only lasts for a couple sessions, and then we see some type of pretty big consolidation. You'll notice if you go back in time, when you get these big green up bars, it'll last for a few sessions, fizzle out, consolidate. Over here, we had the same type of thing. Took a couple of months to consolidate. And then, of course, we went into a much larger consolidation. And then we had another run here where things started to extend and pop. This feels like kind of where we are right now with this kind of bar. We could see it have some pretty decent gains over the next couple sessions next week. But I think we could consolidate a little bit after that. So we could get up to this 1680. Who knows where we're going to go, but I think we'll see it continue to go a little bit higher and then consolidate and prepare for another launch going forward. Taking a look over at silver, it's up 1% today. Coming up to test some of these more significant highs. This blue line's a long-term resistance area on the chart, and we're coming back up to that area. Overall, gold is leading the way, breaking its previous highs, and is definitely in a full-out bull market. Now, if we look at gold miners are trading up this morning. They're up about 2%, trading at 44.74, which is right about here. It's so trading up higher again this morning. Yesterday we broke out, or 2 days ago we broke out of this high, these highs over here. We broke above that. We held it yesterday. Today we're starting to see it pick up speed. And again, this big picture here of gold miners, it's got lots of potential to the upside. We're looking around the 150 mark for our first target. If this has some legs behind it, we should see a nice move up to that $50 mark for GDXJ. Looking over at natural gas pulling back today, down about 2.25%. It has had a pop up to the 20-day, started to break out and run, reverse back down. Today it's threatening and getting below this 5-day moving average. We'll see if this is a little bit of a shakeout. Overall, the momentum has shifted to the upside. We do have the technicals on the upside. We're usually, once you've broken at least two previous pivot highs, which are these two highs, That's usually when you can buy the first pause or pullback. The market had a pause, looked like it was ready to run yesterday. We got long in natural gas, but it is having a pullback, and pullbacks can be bought. This is still a very bullish level down in this zone down here for natural gas to fade back down to. Last time we had a play like this, we saw it pop and move up here. This is when the signal changed. We ended up getting long. The market pulled back for a few days and then took off. We did the same thing over here, getting in when the momentum shifted. It has like a little shakeout again, and then it took off. And hopefully this is the same type of thing. The momentum is shifted. It's having a little bit of a pullback, and hopefully over the next week or so, it'll grab some stability, and we start to see this take off as well. So we do have a small position in that. Natural gas is very volatile, which is why we have a small position, about 12.5% of our portfolio. So it doesn't matter if we take a 10% haircut on a small position like this, it's really only about 1% drawdown on our entire account, which is very minimal. So we can take a lot of volatility in this asset class and it has very little impact on our portfolio. But we've got potential here for a nice 20-25% gain, which would be a half decent little move in our portfolio. When other asset classes are giving us some mixed signals, this one's giving us a fresh new buy signal, and we should hopefully be able to take advantage of that. Looking over at crude, down 1.73%. It came up, tagged the 20-day moving average yesterday. Today it's pulling back. It's down to the 5-day. It's also trading in this little bit of a range right here where we had some previous consolidation. If we were to look right through these bars here, these bars right across here, and carry it forward, you can see we're into this area where it came up. You can't see the wick. My cursor's frozen there now. But more or less the wick came up to the 20-day, pulled back. Today we're pulling back to the 5-day. So we're going to get sandwiched between these two moving average. We're stuck in this little sideways range here. And crude oil is now, it's still struggling within a longer term downtrend, and we're at some resistance areas. I do feel as though it could pop and squeeze and become a little more choppy here, form a little bit of a topping formation and push a little higher. Overall, not looking to really get into it at this point. We're still looking for an opportune time to get in. The moving average has been moving down very quickly. Originally, when it was making this base, we were looking for this 55 area as our upside target, but as time passes, the next resistance area, the 20-day, moves down and starts lowering our target levels and creates more resistance below. This was a nice decent gain. Now we're getting squeezed down lower, and now we're pinched between two moving averages, which gives you a little bit of more uncertainty of which way things are going to go. It's going to usually become more choppy. It'll bounce off the 5-day, reject off the 20-day, and then it's got resistance above it again. So we'll see how things go, but not in the crude oil trade at this point. Looking over at the US dollar index, let's just take a look at the US dollar index. Try and pull it over here. Here is the US dollar index. If it all squeezes into the window. Anyway, you can see here, we've only had a couple down days in the last month on the US dollar. And today we're having the third down day really for the month. It's a half decent down day, but we're seeing gold really take off today and gold miners. And this is just a down day, just negating some of yesterday's gains. And you can only imagine what would happen if the US dollar index started to roll over and sell off. But overall, this is a good sign. When the dollar is rising, gold is going up. When the dollar is falling, gold is rocketing higher. So these are all very bullish signs for the precious metal sector longer term, because the dollar is getting pretty overextended. I wouldn't be surprised if we get into one of these sharper pullbacks. Everybody's been piling into it, and it's overdone. The trend is up, there's no doubt, but some type of pullback could be very good for the precious metal sector and could really kick them into high gear going forward. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.